Hello guys, and glad to have you on board again today. Yesterday was kind of an odd type of session, so we're going to try reviewing this one, kind of a debrief more than anything else. Yeah, complicated thing to navigate, so I suggest rather than losing and wasting your time, we're going to go right into context analysis in here. Yeah, let's go down this road. Okay, I'm switching immediately to showing all the information, so I'll get right to the point. Yesterday has been a huge down session everywhere else in the globe. Okay, Nikkei down, DAX seriously down yesterday, EUROSTOXX breaking support as well. Just what the fuck's going wrong with the VIX? VIX definitely doesn't go down this road. Feels like volatility was subdued yesterday into the US. Like, oh man, that's not really much of a thing, okay? Just for you to understand, that's the second time in a row that we up gap on the VIX. So this is a pattern in here, real complicated expert pattern. That means that as long as this gap is opened, this isn't bearish at all in terms of volatility, okay? So if you think yesterday was like, oh man, they really made a lot out of this, but this is definitely not bearish, I would say not yet. So more importantly, we're going to have to bear in mind whatever happens within the next 24, 48 hours, okay? The other technical information I want to notice out there is the fear and greed index that has gone from 52 to 51, which means we've made a lower shadow candle, so we definitely have gone bearish territory during the day. It's just that, I mean, throughout the day gone negative, but at the end of the day made it the magical close at 50. So real great. Until then, we're also going to notice that the 30-year bonds are still flat, dealing with this intermediate price area we figured out. So very complex area to navigate out there. I'm still waiting for prices to drop into the lower areas of these 30-year bonds. We already know about that. We already talked about that. So I'm not going to go down this road today. I want to make a real quick podcast. So right to charts. Okay, so in here is the S&P 500, the one we already have a look at, but we also going to have to talk about the Nasdaq. Yesterday on the intraday session, I've been live trading it all day long with the with the French guys into Discord, and we somehow at some point highlighted a very tricky pattern. But anyway, just to go real quick on highlighting what's been said into the weekly briefing, which is, remember, what we need to follow all the week long. This is the guideline global plan we just have to follow, and of course we do updates on this as things tends to roll out, either validating or invalidating, of course. What has been happening since then is just total validation. The plan during the weekend was to say, all right, we do have this rising moving average and this 23% Fibonacci cluster. We're probably going to go down this road, okay? Remember that out of last Friday, people were already calling for a dip. So we've gone lower, and that was totally part of the plan. So we've gone out there and we said, you've got the freaking podcast to assess and to attest. Don't sell the shit and don't sell the supportive areas, okay? We've said that the only areas in which supports can eventually be considered is below this area. So I'm saying don't sell, but don't buy either. I personally think that buying can only be done slightly below the moving average and below the support. So I would say if prices tends to try dipping below 3,200 is where some kind of trendy trades can be triggered. But until then, just let the crap go on, okay? And even if we do make dips and rebounces, we can very well dip again today and so on. I think there's no supportive prices unless we go below 3,200. This is the area in which I'm eventually willing to buy some things. But am I talking about buying the S&P 500? Fuck no. It's just that I think the 23% cluster and the rising moving average is an area for stock picking, which means in the S&P 500, we know about the problem about 10 stocks. Or basically just the tech sector in general. So if we just flush out this area and this sector out of the S&P 500, there is still plenty of other stocks. So are there some defensive sectors that eventually provide some buying opportunities out there in which you can eventually overperform the potential range that may show up out there? I think there are lots of opportunities. So if you're a buyer, like one of those guys that have been totally brainwashed in which never short sell the market, always buy, then if you're really that type of person, first of all, you're not necessarily wrong, let me be honest, but you must do it right, okay? When the market goes bearish, if you want to find bullish opportunities, you need to do it smart and doesn't and do not buy just out of nothing and buying indices that have shown some bearish patterns. So I think the best at play in here is going to be ranges. And if you want to buy those ranges, either you do it real smart on bulk buying indices, or you do it smart and you get to stock pick some defensive sectors or some things that might showing some rotations, cyclical opportunities, all of those things. Just do your job, okay? But I suggest not buying indices out there, just waiting for these things to range, okay? Waiting for a few days eventually at best. The thing is that it's all about the Nasdaq. On the intraday session, I'm going to go real short term out there, and I'm not going to go into fully detailed explanation out there, but just letting you understand one of the patterns I teach to the experienced guys, and don't worry, sooner or later I'll make a podcast about it. But here's how it goes, okay? Bearish trend, okay, reversing context, pulling back the context, not making new lows, reversing context, and pulling back the context is a typical delayed third range boundary context, which means this is where you're going to figure out your third range boundary. The problem is it's there, okay? It's just that the indicator didn't react. It should have reversed out there, just didn't. So here's where your third range boundary is, okay? So first third range boundary. And the market makes new lows, which means a first range boundary has been built again. Second, reversing context, third range boundary. Great. So another third range boundary has happened in here, okay? So in here, there is a lower shadow candle, okay? So first, second, okay, and then, oh man, another low point, which means first range boundary. Reversing context means the second range boundary is down the corner. We're making higher high points, okay? And then we're retraced to a rising context. It wasn't enough Fibonacci retracement to buy, but as we reverse there and pull back to the context, we know that the third range boundary has been delayed in here once again. And this is a pattern. 3 aligned third range boundaries isn't good sign. It always means something that we're ranging on the higher time frame, and you definitely want to zoom the fuck out. So when I saw this thing, okay, that we've reversed in here and that we validated the pattern by going back to the context, I was selling right on top. I decided to get the freaking fuck out and take my profits. I was lucky to do so because otherwise I would just have been taken off the market. So at least it was tiny gains. I even managed to buy out there, profit take in here if my memory is right, or closer to this area. I sold right on there if my memory is right as well. So it was my daily job yesterday was selling, buying. Yeah, it was selling, buying. I don't remember. Yeah, that's something that I'm not sure it was this top that I sold. Maybe this one or this one. What time was that? No, it was in the morning. So it's probably this one that I sold or this one. But I made one move to the downside, then one move to the upside, and this one that has been aborted in the meantime. So anyway, we don't give a shit about that. So it has signaled us something. This trend line got fucked up because we got out of this range. Generally means we're ranging on the higher time frames, and this is where the thing plays out. 3 minutes. All right, definitely the first time frame we're having a look at, but this one feels pretty irrational. Anyway, you'll see what I mean. Okay, so it feels pretty volatile anyway, but as you can see, we're crashing context and stuff like that. So, all right, let's have a look at 15 minutes. And here we go. We've reversed the 15-minute context. So this is where the range is at play now. And just to give you a glimpse of how these things actually trade, okay, when you have these three third range boundaries alignment, you can draw a very solid trend line. You know that anytime we're going to dip below this trend line, the market makers will buy. So today, if we ever go down there, you know that there is a buying opportunity on top of the third range boundary things that show up. So anytime we dip below, if we get 61% retracement and being in the context, just buy the crap. That doesn't mean buy for a long term, just like I said. It's the opportunity for you to buy some things, but don't buy tech sector. Like I said, use this timing to buy some individual stocks that provide much better risk-reward ratios, because I don't know what the range will actually get to look like. All I know out there is that the best we can get is eventually going out there, making an ABC structure, looking for volatility boundaries, or just building a fucking triangle in which we just go flat, waiting for stuff in which anytime we dip below, prices are rebouncing, but anytime we get to a trend line, prices are rebouncing, and so on until we actually succeed fucking these intermediate supports. Like I said, it can take 1, 2 days, eventually 3, 4, I don't give a shit. All I know is that as long as I don't have a mature 15-minute range, I don't do anything with the Nasdaq right now. I'll just let this thing go flat, whatever. I'm just waiting for the structure to validate and to mature. As it is mature, I'm going to start selling again, but just not right now, okay? I'm waiting for further information on the Nasdaq. Yesterday has been an invalidation day for the bears. We've been pushing. There was several odds for us to succeed, but we failed. Just look at the H1 time frame, okay? That was the yesterday's plan, basically. Looking at this time frame for selling opportunities and breakout trades. As we do have oscillation between the trend channel and the context, totally ready for a breakdown. But yesterday we just gone so close to it, breaking both the context and the trend channel. If we were just a 50 points lower with a candle close, we were perfect for going down. But in the same time, does that trigger any bullish reaction? No, we just oversold, which means oversold, pull back to resistances. We can just range a bit and just fuck it all up later on. That's just as simple as that. Okay, we need to break something. So now everyone has seen this pattern. Okay, we're building some kind of this thing. I don't know what it looks like. It's pretty boring. Okay, but this is the trend line we want to break. So we're just waiting, ranging to actually get to do it later on. The moving averages have reversed. So all of the things in here, volatility is rising. So we do have everything we want for a carnage to show up. It's just yesterday wasn't the appropriate timing. Some people might have been short selling volatility to prevent that from happening. But I just think it's a delayed system out there. Just trying to gain some time, but not changing the overall scenario. Anyway, we do have more than enough right now to just switch to a conclusion. All right, so yeah, I'm sorry to say, oops, sorry about that. Okay, I don't think this is bullish. I just think what we've experienced yesterday is just a false flag in which probably too much people were selling the supports, and we've made it clear not doing it was the plan. So if you sold yesterday's low points, Jesus fuck, it could be done on the intraday perspective, and we did it with a plan. I mean, we were waiting for mature range to show up, and I'd done a perfect job. I sold perfect entry prices. I just discovered throughout the day that someone was buying stronger than we were selling, and therefore it wasn't an appropriate timing to sell. It's just as simple as that. Trying on shorter time frame, because it could have worked out, just ended up not to. Just giving us one very valuable information and reliable information is, this is not right now. But that doesn't mean it's not going to show up a few days from now. It's just we're broadening the ranging structure. Yesterday we were ranging 1 minute, 3 minute time frames. Today is all about 15 minute, and 15 minutes just says, all right, we're going to wait for approximately 1 to 2 days to get a mature range. And once we get it, if still lower levels of retracement, trending opportunities on the higher time frames, means we get down the corner. It's simple as that. So yeah, I'm waiting for mature ranges right now. And until then, either we do have an external factor triggering some kind of flash crash or whatever, something epidermic, or we just wait for further information. That is the new plan, guys. So until then, just range trade, and in which I suspect if you want to buy, because I think that's the only thing to do out of supportive areas, don't buy bulk, but buy stock picks, okay? Buy some areas that have more defensive approach, that can provide much better risk-reward ratios than buying indices, okay? Until then, sellers must be patient. That's the end of the game. See you guys later.